IT is clearly firing up, and LTIMindtree is one of the reasons for that. Good show as far as execution is concerned, even though there was a bit of a miss on margins. But they've also signed this deal with the APSA group about the banking space in Africa. Let's welcome on board Sudhir Chaturvedi as well as the management joining us from the APSA board, Johnson Ediso. Listening to the conversation we had with them earlier.
This quarter for us, BFS returned back to growth with 2.6% quarter on quarter. And along with tech and services, BFSI and tech and services are 60% of our revenue. So a majority of our revenue returning back to good growth momentum. This is on the back of three things. Firstly, we are seeing that our clients have resumed, especially our banking clients, have resumed some of their high priority transformation projects that were paused during the last year or slowed down. Those are back on track and they prioritize the ones that they want to invest in. Which is really in the core area. So we see this as sustainable transformation spend. Secondly, we are seeing that clients are also doing vendor consolidations. And as part of the vendor consolidations, we've been on the right side of vendor consolidations. We've signed several new deals and master services agreements with clients, especially in the banking space. And that's reflective, and we are here to talk about one today. And third, but last but not the least, clients are making foundational investments in AI. And especially banks and tech companies, tech services companies are making those investments in a way that they can start to leverage AI across everything that they do in the organization. And those three tailwinds are the ones that have helped us grow this quarter, and why we also feel that this growth is sustainable.
That's interesting. Let me then listen it from the horse's mouth itself. Johnson, it's great to have you on the show to get the perspective from the client side as well, to understand how things are. Because for the last 12 to 24 months, this entire sector has been clouded by uncertainty, delay in decision making, etc. How have things changed for you in the sense, how are you looking at decision making when it comes to the IT spends?
It's a real pleasure to be here, visiting from South Africa. We're a Pan-African bank, so we operate across the African continent. We're in 11 markets. South Africa is our largest, but we go from West Africa and Ghana to East Africa. We are still investing heavily into technology. The spend is up 8 to 10% a year. Why is that? Very simply, the African continent is a young continent. The average age is 19. Most of our customers, and increasingly our customers, are clearly digitally native, actually. So for us, the investment in digital, in data and technology is something that we are continuing to drive. Clearly, we use it to drive top-line growth, and then also clearly we use it to make sure that our cost of service, incrementally, we can control so that we can bring more and more customers and we can drive more and more financial inclusion on the continent.
Okay, that's the word coming in from the LTIMindtree manager.
If you like this video, then like, share and subscribe to ET Now.